Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita. Khemka. Well, another volatile day for the market. Yesterday, we saw some losses being paired in the last hour of trade, but today, no such luck. In fact, if you look at the Nifty, it failed to hold that 25,700 mark. In fact, 25,791, that was the day's high. And 25,603, that was the day's low. Although we are off lows, but we are still down 70 points on the index. But the story right now is in the broader end of the markets, because the small cap index is shining bright. It's up 0.7%. Even the mid cap index has managed to recoup some of the intraday losses, up 0.3%. And the Nifty Bank index that has been outperforming consistently today as well. The Nifty Bank index is back in the green, marginally so, but nevertheless, I think that's something that has helped the Nifty pair some of its intraday losses as well. But it's back-to-back expiry session. Yesterday it was Nifty expiry, today Sensex expiry. So yes, there was a fair bit of volatility being expected in the market any which ways. And that's what has really played out. The swing has been there. It's almost been a 200-point swing on the Nifty today. Breadth of the market, even Stevens, but slightly in favor of gainers. So that's something that one should take heart from, because the market breadth has been extremely poor in recent times. Yesterday as well, we saw good recovery in the broader end of the markets. But how sustainable is that recovery is the question, because every day, we see the index also trying to, hold on to gains, but that really doesn't happen, and we see, gains being paired and selling setting in at higher levels. Of course, if you talk about sectors, it's out and out the metals basket that's shining bright. Stocks like Vedanta have hit 52-week highs. Silver, gold, hard assets have been rallying, and which is why we are seeing stocks like Hindustan Copper, Hindustan Zinc, etc. Extending their gains as well. PSU banks also doing well, given the fact that we have some mid-cap banks reporting very good set of numbers. But to understand the texture of the market here on, let me bring on board Anshul Saigal, market expert, to understand how one should navigate this leg of the volatility. Anshul, first of all, welcome to the show, and would like to wish you a very happy New Year. I haven't really interacted with you in a very long time. What are you making of the kind of volatility we are seeing in the market? Domestically there are a fair bit of good news as well, but seems like it's the sentiment that has taken a sharp knock, and any attempts to stage a recovery, it just turns out to be feeble at the end of the day. How are you looking at this leg of the volatility? How should one navigate? What are your thoughts?
Good afternoon, Nandita. Always a pleasure to be with you. Wish you a very happy New Year and a happy Makar Sankranti as well. Yes, you're right. This has been a very volatile phase for the markets. But we have to see this phase in context. Since 2020, towards March and thereafter, we saw a one-way rally, and stocks became quite expensive as a result of that. Also, the sentiment in new participants in the markets was that markets only keep going up and there is never any correction. So they were taking inordinate amounts of risk when investing in stocks. They were doing F&O, they were taking leverage to invest in the markets. And this phase in the last 1 year was a reality check for them that, while companies can continue to do well, but because valuations have run ahead of themselves, valuations need to correct themselves. And when that happens and you are overly leveraged in the markets, it can be very painful. And it isn't a one-way street in the markets. There is always a phase where markets correct, remove the froth, and then set up for the next leg of the rally, which is something that we have seen over the last 1.5 years. Since, in fact, September of 2024, the broader market has been on a downswing. Now, I read a book, Nandita, many years ago, written by Sam Zell, where he said that you should buy when there is blood on the streets, even if that blood is your own. And I can tell you that being in the markets and having predominantly invested in the markets over the last 25 years, as also just now as we stand here, I'm also hurting at this moment, but I'm from here to the next 3-5 years, I'm very bullish on how the setup is. Companies are doing well, businesses continue to do well, valuations have corrected, and given where we are in the markets as a result, we see that there are attractive opportunities to invest in the markets.
Hmm. Okay, attractive opportunities. So, I would quickly want to go to what those attractive opportunities are, because our viewers would really like to know. Hope is that mid and small caps will see some recovery this year, because last year, mid and small caps had underperformed benchmarks. Large caps did fairly well. Everyone loves the safety that large caps provide, but the joy really comes when you look at your portfolio that moves because of the kind of moves you see in mid and small caps, right? That provides momentum to your portfolio. So would that happen? Do you think if you see the setup to be positive for the next 3 to 5 years, particularly for this year, what do you feel? Where will mid and small caps head, and where are the opportunities right now?
One sort of tendency that I've seen in the markets over the last many years is that just before a crisis hits, many participants in the markets, because they are seeing strength in small and mid caps in the recent past, they go into that sort of crisis fully loaded on small and mid caps. And when the correction happens, right at the
Hmm.
end of the correction, they switch trades and they move from small and mid caps into large caps, because large caps have corrected less or they have not corrected at all, while mid caps and small caps have in the recent past corrected a lot. Now, there is nothing worse that an investor can do that post the correction, change styles, change investment opportunities, and get into a very different set of opportunities. If you have borne the pain, it is incumbent upon you to remain invested in that segment of the market and ride the upside when it comes. Of course, it tests patience, but that is what the markets are all
Hmm.
about. And where we are today, let's look at some numbers. If we look at the December quarter of last year, that is 2024, that December quarter, we saw small cap earnings correct around 16%. There was a degrowth of 16%. Now, on that low base, when
Hmm.
we hit this quarter, we are in all likelihood likely to see upsides on or tremendous growth numbers on the small cap index. Some estimates are as much as 30 plus percent. Now, when you see that kind of a growth and stocks have corrected, I mean, from peak, small cap index has corrected 20%. I would only welcome investing in such a basket of stocks rather than shun that basket and stay away. So this looks like an interesting time for small and mid caps.
Hmm. Okay, interesting times for small and mid caps. But tell us, where are you spotting opportunities now within the broader end of the markets?
There are many segments, Nandita, in the markets where opportunity has arisen. There are certain media companies, for instance, some music companies which used to trade at significant premiums to current valuations. Those have corrected. Look at the banking stocks, banking and finance stocks. Those have corrected both in price and time. While in the current quarter, I think we after a long time we saw 12 to 13% credit growth, which means credit growth is kind of accelerating. Look at capital goods. We were jumping over one another to buy into capital goods companies. Capital goods companies have corrected meaningfully. Tech, there is a fear because of AI and US tariffs. Tech will see a significant headwind. For that reason, there has been both a time and price correction. Mid cap tech looks particularly attractive. Large caps as well for portfolios can become quite interesting at this time with valuations having corrected. Renewable energy, defense, certain names in
Hmm.
those pockets have also become very attractive. The growth opportunity and the total addressable market for those companies is so huge that we are only scraping the surface. So even those segments look very interesting. Within these, of course, we are not macro
Hmm.
buyers. Stock specific purchases, bottom up investing is what will get you outsized returns. And I think that is what an investor should look at this time.
Okay, there are quite a few sectors, and of course, not to forget, you have to take a bottoms-up approach to provide that leg up to your portfolio as well. But what about EMS? At one point in time, it was the market darling. But look at the way stocks like Dixon have corrected. In fact, I was just going through one brokerage report which had cut its target price on Dixon to sub 10,000 rupees as well. Do you see more, correction, more scope for more correction, and should one wait it out to get into these stocks, or would you say that the case for investment isn't there in some of these stocks right now?
See, this is a typical case of market euphoria and market apathy. If you see the name that you mentioned, it is a very high quality company with a long growth path ahead of it as a result of the opportunity that this segment provides for the markets. However, if you look at the valuations that this company was trading at one point it was trading at some 100 times price to earnings. While it is a very high quality company with a strong growth trajectory, but when you're trading at 100 times price to earnings, most of the growth for the future is already built into price. And so, even if growth remains strong, the price may have limited upside and substantial downsides. We've seen that play out. It's not like this segment has degrown, but it has just not grown to the extent that the market was building in into prices, and as a result, we've seen a correction in prices. High quality space, but I would wait for the dust to settle before I get into this space again.
All right, so some more valuation correction isn't ruled out when it comes to some of these EMS names. But with that, Anshul would like to thank you. I'm afraid we have to let you go, but I look forward to a longer conversation with you soon, if not on the closing show, on the opening show, but very soon.
It will be my pleasure. Thank you for having me, Nandita. Always a pleasure. Thank you very much. Bye bye.
Thank you. Thanks a lot. Well, on that note, let's take a look at what the markets are doing. You know, 75-point cut on the Nifty. Even the Sensex is down somewhere around 280 points or so, but we've managed to defend that 25,650 level. And of course, after that low that we clocked in on Monday of 25,473 or so, we managed to steer or stay away from those kind of lows. So we've made higher lows on the index since then. So that's something that I think should provide some kind of comfort. But if you look at the broader end of the markets, there's a fair bit of recovery there. The mid-cap index is holding out in the green. As I mentioned at the start, the small-cap index was trading with the gains of somewhere around 0.7% last time I checked. The Nifty Bank is marginally in the red as we speak, but it's come off from lows, so which is something that one should take heart from as well. Advanced decline ratio is just marginally tilted in favor of laggards. But even Stevens, that's how it's looking like at the current juncture. Earlier in the session, it wasn't looking all that great, but it has seen some bit of improvement. In terms of sectors, of course, hands down, as I mentioned, it's the metal pack that's grabbing the limelight. It's shining bright, almost 3% uptick on the Nifty Metal Index, and some of the stocks that are shining bright here in the metal pack are the likes of Hindustan Copper. 6.5% move on the shares of Hindustan Copper, and in tandem with some of these global metal prices, we've seen shares of Hindustan Copper, Hindustan Zinc being on a tearaway rally, and that continues because Hindustan Zinc as well is up somewhere around 4%. Vedanta up 6%. There has been a brokerage note on Vedanta. Target price has been hiked, and very bullish note. We'll take stock of that in just a bit. Nalco is up 5%, Tata Steel up 4%, SAIL up 3.5%. The list of metal gainers is fairly long, and if you look at PSU banks, they are also doing fairly well because we had some mid-cap banks reporting numbers and they were pretty solid. Union Bank for one is up 7.5%. Numbers came out. Indian Overseas Bank was the other one where numbers had been reported. The stock is up 2%. And RBL Bank was also in focus. The company has reduced deposit rates. That of course sent the stock higher in trade. What's not doing well? IT ahead of Infosys earnings. That index is down 1%. Real estate index, no respite there. Although shares of Puravankara and Ajmera were rallying after a good third quarter update. For the index per se, no respite. The index is down almost 1%. Autos also on the back foot today. FMCG extending losses from yesterday. Pharma, same for pharma as well. So mixed picture, but metals and PSU banks are leading from the front. Taking a look at some of the top movers, I already mentioned some of the metal names like Tata Steel, Hindalco, etc. doing well. NTPC is the other one that's up 4%. Axis Bank from the banking lot is up almost 3%. I think in fact, it has helped the bank Nifty to come off significantly from the day's low. But if you look at some of the other movers as well, Eternal, that stock is up 1.5%. Ultratech Cement is up, Geo Financial, Grasim, Bharat Electronics, Coal India, these are some of the other gainers. On the flip side, Asian Paints, I think, was in a spot of bother yesterday as well, and today it's down 2.5%. There has been an uptick in crude prices that could have contributed to the weakness that we are seeing in shares of Asian Paints. TCS, Tech Mahindra are on the back foot. Maruti Suzuki is also under pressure. Other private banking names like ICICI Bank, Kotak Bank, HDFC Bank, all of them are under selling pressure. Okay. On that note, to understand, how we are poised for the last 10 minutes of trade, let me bring on board Ashish Bahety, Technical and Derivative Research Analyst, ProfitMart Securities. Ashish, lovely chatting with you this afternoon. Once again, 25,700, we failed to defend that level. But, the good news is that, we've been making higher lows ever since we hit that low of 25,473 on Monday. What's your sense? Would you take comfort from the fact that we are making higher lows, and would you say that the downside would be capped at somewhere around 25,600 or 25,550 here on?
Maybe early to predict the downside, but at least on the positive side, the last 4 days, Nifty is trying to consolidate near 25,650 zone. Even today, we have seen there's some buying interest near that zone, 600 to 650. And that's a positive sign. If market holds this limit and surpasses 25,800, then we are well poised market heading back to 26,000 plus kind of levels. But I'll say the way yet the selling is there. I mean, we have seen today IT companies tanked post most of the midcap IT companies seen a sharp correction. So, however, it's more like I'll say event-driven calendar now because of the earnings season. And on the downside, 600 yes is becoming a strong support area, but on the upside, 25,800 is still a bigger resistance zone.
What about the Nifty Bank Index? It has been managing to outperform, and today as well it has come off the day's low quite significantly. What is the setup looking like, and which are the stocks that you like within the banking pack? We'll talk about the PSU banking lot in just a bit, but from the private banking names, we've seen pressure coming through on the likes of HDFC Bank. ICICI Bank provided support yesterday, but I think today again it's out of favor. So how are you looking at some of these private banking names?
So out of the private banking, I'll say there's a rotation happening. Yes, ICICI was the front torchbearer, which lead Bank Nifty or didn't allow Bank Nifty to fall. However, the weakest of the entire private sector bank is HDFC. We've seen other than HDFC, there's still a rotational buying happening. Today, Axis is contributing. Yesterday, ICICI contributed on the upside. So, however, X of HDFC or rest all the banks is showing some buying interest. However, HDFC is the concern zone right now, and that's where that's what putting the entire pressure on the Bank Nifty.
And now, PSU banks, the likes of Union Bank, rallying in trade. Numbers came out and they were fairly positive. Stock has reacted quite positively, up 8%. Any trade that you would take on some of these names, Union Bank, IOB, etc.?
So I'll stick to the larger private sector banks. All of them are showing massive strength. SBI today also made an all-time high today. It touched 1,013 the trades. Even PNB showing a good reversal and it is up 3.5% in today's trading session. So out of the entire PSU bank side, we'll stick with PNB, Bank of Baroda, and SBI on the upside. However, Can Bank is one stock which has already performed well and still looking good on the charts. So it's showing a good reversal from the 20 demo. So that's out of the smaller banks, Can Bank is the only bank which we are liking right now.
Okay, Canara Bank is the only bank that you like from the smaller PSU banking names. But metals, I don't know, I mean, where to call the top for the likes of Hindustan Zinc, Hindustan Copper. All of them are seeing a tearaway rally. Of course, that's attributable to the fact that global metal prices have been on a tear. Gold, silver, once again hitting record highs, new highs, and copper as well. Would you be able to, how much of an upside do you see? Because every time we meet, we talk about these stocks, but there seems to be no topping out for some of these names.
See, I mean, till the time the geopolitical thing continues, and I will say till the time Trump is in office, this is the new normal. Metals will outperform at least for some more time to come. We've seen basically the precious metals rally still continuing even at these levels. Silver is still showing a huge buying interest, and there's a continuous buying interest in silver. And because of that, the entire pack of both precious and non-precious metals looking good. However, I'll say on the metal pack, stick to the non-ferrous side. That's where the bigger moves are coming, and since most of them stocks are already trading at blue sky trajectory, so there's no resistance in these stocks right now. All we have to do is just trail the SL and just continue with the trend. It's very tough to say where this is going to top out, but it doesn't look like in the short term there's any topping happening. However, our preferred pick from the entire metal pack would be non-ferrous metals.
Okay, you like non-ferrous more. But since you're talking about non-ferrous metals, I want to just talk about Vedanta. I also want to talk about MRPL because it has shot up after the numbers came out. But for Vedanta in particular, the stock hit a fresh 52-week high. Nuvama has maintained a buy call on the company. Target price has been raised to over 800 rupees from 686 rupees. Now, it believes that the company is in final stages of statutory clearances for its 5-way demerger, and that of course will unlock value. And of course commodity prices have been strong, there has been cost reduction as well, and volume growth. These are some of the factors that are strengthening the investment thesis according to Nuvama. For FY27 and FY28, EBITDA estimates have been raised by 17% and 8% respectively by Nuvama. In fact, they are expecting EBITDA to grow at 20% compounded annual growth rate over FY25 to FY28. Now, they've also made a very interesting point that the CMP or the current market price of Vedanta is yet to fully reflect the aluminium and zinc business value. And according to them, current price does not fully factor these two businesses, and that is why according to them all the other businesses are actually available virtually free. So they are seeing quite a bit of an upside from here for Vedanta. Particularly for Vedanta, what is the kind of target you are envisaging looking at the up move today?
See, it's a perfect play for all the non-ferrous metal. It have every non-ferrous metal in its kitty, right from copper, aluminium, zinc, and including the crude. And we've seen an upsurge in crude also. And when at these prices, we have seen today that almost at least 2 to 3 times more volumes than the average volume, and stock is up 6%. So it's all-time high. Stock is making a fresh high, and it's giving a breakout at these levels at there's a clean price volume breakout. On the upside, I think 700 is certainly a one psychological level, but that's like that it may achieve in a couple of trading sessions the way it is moving. On the upside, I think 750 would be a zone where I think it will look a little stretched out and expensive, but till 700, there's still any dip can be used as a buying opportunity.
Okay, buy on dips, Vedanta and 750, crucial zone, watch out for that. But Nuvama of course has set a target price of 806 on the counter. I was talking about MRPL. Numbers have just come out and they are looking fairly strong. Revenues have grown in excess of 13%, and profits have seen a multifold jump. Look at the margins, 11.3% vis-a-vis 4.7%, so double digit margins as well. Stock has shot up. In fact, both MRPL and ONGC have been doing fairly well, in tandem with the movement in crude prices. Crude prices have been on an upswing amid all the geopolitical concerns, supply disruptions, etc. Which one do you prefer, MRPL or ONGC?
So, out of the two, I'll say MRPL looks much better because one, it's non-F&O stock right now, and because of that, we've seen when stock is already corrected. I mean, November high was almost 180 plus kind of a zone, and stock corrected till 140. So there's a reversal on the charts right now in MRPL, and we are hopeful that stock may will fetch or move up to 170, 175 kind of a zone. So MRPL is looking better compared to MRPL and ONGC. But however, even compared to ONGC and Oil India, I prefer would be Oil India.
Okay, that's the preference when it comes to the upstream oil companies. But I want to draw your attention to a Puravankara. Shares are rallying. Of course, we've had the third quarter update coming in today. Sales have been good and collections have jumped 22%. Pre-sales have risen 17%. But the good part is that, of course, we know that real estate pack has been beaten down quite a bit. So, some bit of relief if you see some of these realty names, rallying. Even Ajmera Realty posted its third quarter update. But what do you do with some of these beaten down names? Would you look at Puravankara, Ajmera, any of these real estate names after the kind of hammering they have seen? Would you say that risk reward wise they are looking good now?
See, pretty selectively we have to go in this space for Vankara, and these smaller real estate companies are still showing good buying interest. However, on the larger side, we have seen all DLF, cottage properties, and even overall all of them, including even Lodha, all of them are under huge pressure. And even despite we've seen last couple of days Nifty doing a sector rotation, but these sectors still remain under pressure. So if an investor wants, I mean, Puravankara and Ajmera are the two stocks on the smaller side, which they can look. But that's purely, I'll say, number driven. On the bigger company, I will say probably Shobha is one Bangalore company which is looking good on the charts.
Okay, be selective. That's the call on real estate. But let's take stock of the market closing. Hold that thought. We'll come back to you, Ashish. Not bad. Of course, it is disappointing that we didn't end the day in the green, but not bad. 25,670. That's where we have shut shop for the day, down 63 points. It has been fairly volatile over the last 2 days with back-to-back expiries. And if you look at the Sensex, that's down somewhere around 240 points. But the good part is that the mid-cap index and the small-cap index, both of them have managed to outperform, ended the day in the green. Nifty Bank index as well, extremely flat, but on a positive note. And even the breadth of the market, slightly skewed in favor of laggards, but even Stevens nevertheless. And sectorally, we all know metals were one pocket that metal was one pocket that was outperforming, almost 3% uptake. And if you look at some of the other sectors, PSU banks helped by those good numbers from some mid cap names. Energy pack as well saw buying interest. Of course, we just discussed the likes of MRPL, ONGC. On the flip side, real estate was the top laggard, down 1%. IT down 0.8%. But I want to point out that ahead of numbers, we saw Infosys stage a very good comeback. From the day's low, shares of Infosys were up 1.5%. So, one would be bracing for some kind of positive news, if we've seen such a sharp recovery, perhaps some tinkering with guidance. Of course, numbers will come out anytime post 3:45. We'll watch out for that, but a good recovery coming in on the shares of an Infosys. In terms of the other movers, metal names dominating the gainers list. Axis Bank, 3% higher on that counter. The Eternals, Coal India, Grasim, Reliance Industries also managed to end the day in the green. Stock has been under pressure of late, was in fact very close to the 200-day moving average level, but did well to recover from the day's low and in fact ended the day with 0.5% uptick, which is what I think helped the index also pare some of those losses, intraday losses. Aside of that, let's take a look at some of the mid and small cap gainers and losers. From the Nifty 500 universe, you had MMTC, that stock again rallying 12%. Jupiter Wagons, another 12.5%. MRPL, of course, we just discussed. Union Bank reacting to numbers. Chennai Petro, Hindustan Copper, Hindustan Zinc, Vedanta, all these names upbeat. Graphite India and HEG also among gainers today. And of course, in general, some of these rail stocks also did well. As I mentioned, Jupiter Wagons, you also have RailTel, That's among the gainers. MCX also up 5.5%. On the flip side, what didn't do well? Tata Elxsi numbers came out yesterday. Street wasn't really enthused by the numbers. That stock was down 5%. You had V-Guard, Polycab as well. I think there was a big block deal in Polycab. That stock is down 3%. Kalyan Jewellers down 3%. Go Digit. And some of these mid-cap IT names saw a fair bit of correction today, the likes of Hexaware, Infosys, etc. They are also trading in the red, and so is IFCI. BSE and IFCI have been rallying in, especially since the SEBI chairperson's remarks on how NOC for NSE IPO may come through soon. Since then, we've seen a smart rally on shares of IFCI and BSE. So that kind of faltered a bit today. Let's talk about some of the other names. In fact, Infosys in particular, you kind of staged a good comeback ahead of numbers. How would you look at Infosys in particular?
See, I'll say on the we're a little skeptical on the large cap IT as a space as a whole. Other than HCL Tech, none of the charts are looking good on the chart. Other than HCL Tech, none of the stocks are looking good on the chart. However, today's recovery in fees are a bit of I'll say impressive. However, if stocks opens above 1650 on Friday's trading session, it will be a good buying opportunity for the next probable target of 1670. On the downside, 1600 should be kept as a support area, and that's where the SL should be placed.
Okay, that's about Infosys. But let's talk about some of these insurance names. ICICI Lombard reported numbers not really great, because net profit was down 9%, and total income however grew 12%, and net premium earned was up somewhere around 12.5% or so. The stock ended lower. Street wasn't really enthused. ICICI Pru on the other hand, yesterday after numbers showed good traction. In fact, it was rallying in early session today as well, but it has come off. How are you viewing some of these insurance names on the charts?
So yeah, on the life insurance, I'll say SBI is looking really good on the chart. Comparing now with the ICICI Pru and ICICI GI, ICICI Lombard is in pressure, and even in today's trading session, we have seen the stock is inched close to 1830 kind of a level. Stock slipped below 200 EMA in the first week of January itself, and after that, post that, we've seen there's a continuously selling pressure in the stock. On the downside, we expect the stock might take a support near 1800 to 1820 kind of a zone. So yes, there's a pain still left in the ICICI GI. On the other hand, ICICI Pru was looking good on the chart. Today was the first sign of a reversal. However, stock is still above 20 daily exponential moving average. And today also it took support near that zone. So next trading session will be very crucial. If stock breaks below 663, then we may see downside pressure. However, if stock holds 663 kind level, we may see a reversal on the chart.
Okay, that's about some of these insurance names. Let's also talk about the likes of IFCI. As I mentioned, that ever since that NOC was, the SEBI chairperson's comment, obviously the NOC would come through any time this month. It's expected this month. IFCI, BSE, all these shares have been rallying in anticipation of that. IFCI in particular, should dips be bought into, or how would you approach it?
So stock shown a good buying interest on 12th of Jan, and after that there's a little bit of consolidation in the last two trading sessions. On the upside, stock has resisted moving above 58. On the downside, it is still respecting 56 level. So till the time 58 is not broken, we may not see a fresh rally. But however, if a stock gives a breakout above 58, we may see 64 kind of a level. So a dip can be used here as a buying opportunity with a stop loss or a support zone, keeping in mind as near 55.
Also, MCX is quite upbeat today. Any thoughts on what are the next levels to watch out for? It's up 5%.
The stock is already trading at all-time high trajectory, and today also it moved almost a 5% kind of a rally. And with a bigger volume, if you see the NSE volume itself is close to close to 5.5 million shares traded here. So stock is really looking positive on the charts, and it's a bigger beneficiary or a direct beneficiary of this metal rally here because the being a commodity exchange. So on the upside, our target for MCX is 2,500. On the downside, one should keep a stop loss near 2390.
Okay, that's about MCX. Of course, let's talk about some of these railway stocks as well that were showing traction today. The likes of Jupiter Wagons. In fact, that was a top gainer on the Nifty 500 index today. The stock has moved above that 100-day moving average level, and it has snapped out of a 5-day losing streak on Monday. If you look at the price action for 2025, the stock declined over 30%. But would any of these railway stocks excite you for trading purpose ahead of the budget? Because these stocks tend to gain traction ahead of the budget.
Yeah, as you rightly pointed out, I mean, usually these stocks show a good rebudget kind of a rally, and after that, if there's no announcement or major announcement related to railway, they might fizzle out their rally pretty soon. So one has to be very cautious here. It should be played only for a pre-budget kind of a rally. Today was the first day of this rally, and there's a clear sign of a reversal. Stall gained the momentum, and I mean, it's above 20 DEMA on the daily chart. So we're expecting the stock to move further up till 360 to 370 kind of a zone. On the downside, 311 should be kept as a support zone.
Okay. Another stock that's on my list today is Polycab. I think the stock was under pressure today. It must have seen a large block deal. Stock is down 3%. Look at the last 1 month, it has actually done nothing. 7,300, that's where it's placed. How would you look at the stock now, Polycab?
So I think because of this block deal, there's a pressure today. However, in yesterday trading session also, we've seen stocks slipping below 20 daily exponential moving average. So the pressure is clearly evident in the stock, and we may see even 7,200 kind of a level soon on the chart. On the upside, there's a resistance near 7,450.
Okay. 7,450, that's the resistance zone for a Polycab. Another stock that's catching my attention is UPL. It staged a good recovery from the intraday lows. It was up 2% from the low that it made today. Any thoughts on how to look at some of these names, the likes of UPL and other chemical stocks as well? Would these names excite you? Because what did you make of the price action today? Sudden turnaround. Could there be some technical levels that it has crossed on the upside?
So I'll say on the entire chemical pack, only the agrochemical related stocks are looking good on the charts, and out of that, UPL is showing a good recovery from today's trading session. Stock almost touched 760 kind of a level in today's trading session, and there was a good recovery, and stock was able to close above its 20 daily exponential moving average. On the upside, we are assuming that stock may even head to 800 and 820 kind of a level. On the downside, 760 becomes a strong support area.
760 support for UPL. One stock that has been under selling pressure is Inox Wind. 6 months returns down 35%. I think the stock has been under continuous selling pressure. Not very far from 52-week lows as well. How would you approach this stock now? What is it looking like? Do you think on the downside, the 110 level that happens to be 52-week lows could be broken?
Yeah, since the stock was introduced in F&O, we've seen there's a continuously selling pressure in both cash segment as well as on the short built up on the stock in the F&O segment. This is looking weak on the chart. Even any pullback near its 20 daily exponential moving average didn't sustain, and we've seen a continuously selling near those levels. However, on the downside, stock has taken some, or stock has created some base near 110. This is not an ideal level to short the stock. However, if the stock moves or pull back to 120, 122 kind of a level, there might be a shorting opportunity again in this chart.
Okay, that's about Inox Wind. Ashish, any recommendations for viewers? It's been a fairly volatile market. If you see Monday's price action, we hit a low of 25,473. Then we staged a very good recovery on the back of some news flow. Obviously, that was because of that comment coming in from the US ambassador to India. But that one-day pop failed to really carry through. And tomorrow we have a holiday. So, any recommendations in these markets that you would like to make for our viewers?
So Hindalco is still looking good on the charts. We are hopeful that stock may even touch a four-digit kind of a level soon. So this can be used as a trading opportunity. I mean, this momentum. On the downside, just place a stop loss near 945. On the upside, 980 can be the immediate possible target for Hindalco.
Okay. So only one, Hindalco?
On the PSU bank side, Bank of Baroda is looking good. So that one space we are positive, and here trading opportunity is visible. The next the stop loss should be kept near 303. On the upside, 315 can be the target.
All right, Hindalco and Bank of Baroda, those are the recommendations coming in from Ashish. With that, Ashish, would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and I look forward to more interactions with you.
Sure.
Tomorrow, of course, it's a market holiday. Rest well, and you'll come back on Friday. See you soon. Thanks a lot for joining in. All right, that was the chart check for the day. The charts that were making the headlines and all the charts that weren't really doing all that great in today's session. But yes, all in all, volatile session, and we didn't really we came very close to 25,800, but couldn't really sustain those levels. Mid caps, of course, had a good day in the end. But we are counting down for Infosys numbers. Remember, the stock staged a very good recovery from the day's low today. In fact, came back above that 1600 level. Over 1.5% recovery from the day's low. So we'll have to see whether or not the company revises its guidance or not. Most of the analysts expect the company to tighten its guidance, and some expect the company to leave the guidance unchanged. So let's see what really happens. Numbers can come out any time, but just taking you through what the expectations are. The constant currency revenue is expected to grow 2.2%. That's according to a CNBC TV 18 poll. In the previous quarter as well, constant currency revenue grew at 2.2%. So it's expected to be rather flat. In terms of dollar revenues, that's expected to grow at that's expected to come in at $5,071 million vis-a-vis $5,076 million in the previous quarter. EBIT margin is seen at 21.3%. That's a 30 basis point improvement versus last quarter. In the last quarter, the EBIT margin stood at 21%. Profit is expected to see a 1% uptick at 7,445 crore rupees vis-a-vis 7,364 crore rupees. Of course, there is expected to be a one-time hit of the labor code changes. Of course, that was observed when we saw numbers coming in from TCS and HCL Tech as well. For TCS, the hit was a little higher, 2,100 crore rupees. That the street wasn't really anticipating that kind of a hit, but let's see how things really pan out for Infosys on that front. In terms of the key things to watch out for, just want to point out the third quarter and fourth quarter or second half is seasonally weak, are seasonally weak quarters for Infosys. In fact, the company won a 1.2 billion euro 15-year order from NHS in October 2025. CLSA says that small impact of the NHS order that the company had won could be seen in the third quarter, with the full impact flowing through from the fourth quarter. So yes, there would be some impact on revenues of this NHS order, so perhaps the revenue figure could look a little better. In terms of guidance, it is expected to narrow its constant currency revenue guidance towards the upper end of 2.5 to 3% from 2 to 3%. Last time it had tightened it to 2 to 3% from 1 to 3%. In terms of margin guidance, it is expected to maintain it at 20 to 22%. Now, margins of course will not include the contribution from the Versant Group acquisition that the company had made last year. Of course, that deal is yet to close. In terms of some of the other things to watch out for, in the last quarter, the company had said that retail remains the weakest link in terms of segments, and it was of course weak last quarter due to persistent discretionary spending constraints in the US. Also, another factor to watch out for will be whether or not the company declares its AI revenues or not. Remember, TCS, it declared its AI revenue for the first time in December during its analyst meet. Then during its earnings, it said that it had seen AI revenues of $1.8 billion in constant currency terms, and HCL Tech of course has also declared its AI revenues, which forms 3% of its revenues. Of course, there will be clarity awaited on what kind of technology spending there will be for 2026. The impact of newly announced $100,000 H1B visa fee starting February 27, 2026. What kind of an impact will that have on numbers? Although IT companies have said that they have reduced their dependence on H1B visa over the years. So, that's one point to note. Of course, we'll have to see what they say about it, if there's any other further comments on that or not. And of course, what the AI adoption and, could mean in terms of margins and pricing going forward. Also, overall client budgets are set in the first month of the year, right? So, we'll have to see whether there are any, commentary in terms of how client budgets are shaping up and, what kind of demand environment is there. There has been a lot of geopolitical concerns, right? So, in the face of that, will the demand revival take longer than what was being anticipated? So, these are some of the things that the street will be watching out for in terms of commentary from Infosys. All in all, important numbers to watch out for, and as I mentioned, the stock did stage a good recovery from the day's low. So, who knows, maybe the market has got a whiff of what the company does in terms of guidance and what kind of numbers it really hands out. We'll of course discover that in just a few minutes, but we'll of course come back with the coverage on Infosys numbers in just a few minutes when the numbers come out. But with that, it's a wrap on Closing Bell. Thanks a lot for tuning in. Stay tuned, we'll be back soon. And of course, tomorrow is a market holiday. In terms of all the market action, that will continue from 9 a.m. Friday morning. But don't go anywhere. Infosys numbers coming out anytime, and we'll be back with that coverage. Thanks a lot for watching. See you in a bit.